Namaskar and welcome. You're watching Business Plus. In a big development today that is going to give more time to taxpayers, the government has extended deadline for linking your PAN card with your Aadhaar to June 30, 2023. Remember, the earlier deadline was 31st of March. More than 51 crore citizens have already completed linking it with their Aadhaar number. So they have linked their PAN and Aadhaar. The government has said that if a citizen fails to link their PAN with Aadhaar, then it will become inoperative and it will later result in consequences such as no refunds and TDS deduction at higher rates. The inactive PAN can, however, be also made operative again in 30 days' time after payment of a late fee of 1,000 rupees. So, important development there. The deadline to link your PAN with Aadhaar has now been extended. Shifting focus now, there's finally some good news for the Aam Aadmi. A few days after the blow to debt mutual funds, retirement fund body EPFO marginally raised interest rates on Employee Provident Fund EPF deposits to 8.15% for this fiscal. It was 8.10% up until last fiscal. Although the rise is paltry, the decision will give partial succor amidst a galloping rise in food and fuel prices. The interest money will, however, not be instantly credited to the accounts, as an approval from Finance Ministry is needed. It is pending. Now, post-approval, EPFO will credit the interest amount into subscribers' accounts. The notified interest rate will be applicable on voluntary provident fund deposits as well. Now, employees whose EPF accounts are with exempted trust will also receive the same interest rates on their deposits. Joining us at this point in time is Professor Arun Kumar, who is an economist. I want to begin by asking, sir, in these volatile times, what message does the recent marginal hike in EPF donates?
You know, EPF, PPF are actually provident funds for old age. You know, when you retire or your job is gone, that's when you get the thing. So it's a social security measure. Now, given that the inflation rates were high, to get real, returns, you have to raise the interest rates to attract, deposits. The second thing that we need to know is that, you see, these are, as you said, uncertain times. And when people are uncertain, they go liquid. Now, to prevent people from going liquid and holding cash, you need to raise interest rates. So there are several factors, I think, that must have gone into this decision. And the interest rates have been raised by the RBI. To attract more funds into these small saving schemes, you also need to raise interest rates along with what the RBI has raised the interest rates on deposits in the banks. So all these factors are working why I think the EPFO and the PPF rates have been raised at this point of time.
Professor, these are very paltry hikes by EPFO. Are they vindicative of those who do not want to come under EPFO and prefer a consultancy professional engagement?
You know, EPFO and the PPF actually basically are, by salaried people and then some business people. Now, a lot of people who are in the government jobs, etc., they already have a provident fund, which will be their main, deposits. But EPFO is for those who are earning small sums of money and they're not necessarily government servants. So they are those who don't get a normal PF. Similarly, PPF is usually taken by those people who are in business and others. But then the return on PPF is quite high because your deposit into PPF is exempt. And then when you withdraw your money from the PPF, then also you get exempt. So the rate of return is quite high on PPF. And that's why, even salaried people may prefer to deposit some money into a provident fund rather than into other things. But given that other, interest rates are rising, they also probably thought that the PPF rates and the EPFO rates should be raised so that some money can keep coming. And this goes into small savings, which goes into the state governments and the central government. So this is a way to raise funds for the central government and the state government cheaper than what otherwise would be obtained from the market.
Okay. But it's still a very small percentage rise there, 0.05%. I want to understand from you, what can government do to ensure Aam Aadmi gets robust returns, post-retirement? What can the government do to, perhaps revolutionize retirement saving instruments like EPF?
Government, is in a dilemma because it's burden on account of people retiring. Pensions was there earlier. the pension burden was rising, so you went for the new pension scheme. And in the new pension scheme, again, people are complaining that these are deposits which are, in the securities market, which is a bit uncertain because the stock market can go up, stock market can go down. So therefore, EPFO, PPF, the regular provident fund and the regular pension, those are more secure. So government, I think, is trying to give certain amount because there's a lot of pressure from government servants and others that you need to go back to the old pension scheme. Government is reluctant to go back to the old pension scheme because it thinks that the fiscal burden on the budget could be quite high. But given that 5 state governments have now gone in for the old pension scheme, Maharashtra is also promising that it might go for the old pension scheme. So the pressure on the center is increasing. Various government employees are also putting pressure for that. So if the pension scheme is revived, then obviously to get more funds, to those people who are not covered by regular pension, I think the EPFO and the PPF rates would have to be raised so that, people can get a better return. But let me say that, short of pension, what return you get on EPFO or PPF is rather small. So therefore, I think what we have to think is a wider implication for social security, for retirement, and for old age. Because in India, we've seen unemployment rising, especially in the unorganized sector. And if you're covered by EPFO, then the EPFO gives you at least a little bit of succor, not too much, but it gives you a little bit of succor while you're looking for something else. So I think, government is in a bit of a dilemma because the burden is quite high. The tax GDP ratio of the government is not rising very much. It is still at about 17% of the GDP, which is coming in as taxes. And because our deficit is quite high, government is not able to raise taxes that much that it can try and provide for greater pension relief to everybody. But I think we have to think about that, how to raise more resources so that for old age there's security, not only to those who are in government employment, but those who are in the unorganized sector and those who don't get any pension.
Okay. Professor Arun Kumar rightly pointing out that government is in a dilemma there, whether to provide better pensions or not. That, of course, is another story we will be discussing in details at some other point in time. Thanks very much, sir, for joining us with all those details and inputs. And moving on, Adani Group-owned NDTV has appointed former Securities Exchange Board of India SEBI Chairman Upendra Kumar Sinha as an independent director and non-executive chairperson of the NDTV Board of Directors. Remember, Sinha served as the chairman of market regulator SEBI for over 6 years between 2011 and 17. The news broadcaster also appointed Welspun India's Chief Executive Officer Dipali Goenka as independent director on the board. Both appointments will come into effect from 27th of March for a tenure of 2 years, the company said in a regulatory filing. Now, staying on course with Adani, billionaire Gautam Adani's AMG Media Network has also acquired a 49% stake in Raghav Behel's digital business news platform Quintillion Business Media Private Limited for approximately 48 crore rupees. Now, Quintillion Business Media runs the news platform Bloomberg Quint, now called BQ Prime. In a stock exchange filing, Adani Enterprises said that its subsidiary AMG Media Network Limited has completed the acquisition initially announced in May of last year. Now, Adani Group has set up AMG Media Network for its foray into businesses of publishing, advertising, broadcasting, distribution of content over different platforms of media network. In September of 2021, it hired veteran journalist Sanjay Pugalia to lead the media company, Adani Media Ventures. Viewers may also remember that AMG Media Network acquired majority shares in NDTV last year. Now, Adani Group stocks, which were staging some sort of comeback in March, are once again under pressure. We will discuss the causes of that pressure later on. But remember, 6 of the conglomerate's 10 listed entities were locked in the lower circuit today. These also include Adani Power, Adani Transmission, Adani Green Energy, Adani Total Gas, Wilmar and NDTV. Meanwhile, Adani Enterprises, Adani Port, Ambuja Siemens and ACC shares tanked 3 to 7% in today's session. The group's flagship, Adani Enterprises, fell about 7% today. Month to date, however, the stock is now up about 18%. Now remember, this is on the back of 54% fall in February and 23% decline in January when Hindenburg came out with its scathing report. Joining me in the studio is my colleague Suyash. Also joining me at this point in time is Rajesh Tamde and Amit Gupta. Suyash, I want to come to you first. What has put pressure on Adani stock? Why is it a boiling pot over the last 1 week?
So Shweta, there are multiple issues that has turned the investors jittery at this point. Employees Provident Fund, which is India's largest retirement fund, said it will continue investing in Adani Group stocks, the two Adani Group stocks, which are Adani Enterprises and Adani Ports, till September of this year. Otherwise, their trustees, unless their trustees decide otherwise. Now, we need to also point out that EPFO is not directly going out and buying into Adani stocks, right? The money that is going into Adani stocks is through their investments into ETFs, exchange traded funds, right? So EPFO has a mandate of investing about 15% of their corpus into the exchange traded funds, which tracks benchmarks like Nifty and Sensex. And as we know, Adani Ports and Adani Enterprises are both part of the Nifty and Sensex index, right? So what this means is that the ETS that are tracking this indices will also continue buying into these stocks, right? And now, since EPFO is investing into these ETFs, the retirement money of the Indians will also continue flowing into these stocks. Okay. So another issue which I think has been the long-standing issue of debt, the latest in that saga is that Adani Group is looking to renegotiate its debt repayment terms in relation to its debt with ACC and Ambuja Cements, which is about $4 billion. And then there is the acquisition of Quintillion, the rejig in the management of NDTV, as you were mentioning earlier. So a bunch of issues that we have that are, that has turned the investor sentiment sour at this point. So Rajesh is also there. I want to understand, Rajesh, what is the biggest overhang for the investors at this point and what's making them jittery?
See, I suppose it is the market perception. I personally feel, if you ask my opinion, I am very confident about it. But the way I have been doing all these programs, a lot of people have been trolling me. I'll give you a very simple example. The same wholesale company, in fact, when they came to India in 90, and Lafarge paid a price of $80 to $90 for acquiring the Arasmata cement plant of Raymond's in Chhattisgarh. That was somewhere in Bilaspur. Well, that time the price was $80 to $90 a metric ton. Today, what a whopping amount these guys have paid. You're acquiring a capacity of 30 to 35 million tons for 80,000 crores. And my contention is, which is the industrial group today, in fact, which has this kind of money to invest 80,000 crores. A cement plant which is making cement through the clinker route will not be acquiring this kind of a capacity. A cement plant which is through the limestone route, which has got an annual capacity of 10 million tons or 15 million tons, will not like to grab a company because that would be a too big thing for them. Capacity of 10 million ton company acquiring 35 million tons not been heard of. That's not even economically, it doesn't become viable also. And tell me something, my contention is that the Adani, the Dhamra port, which was bought by these people, which was jointly promoted by Tata Steel and L&T, and today you're putting up a terminal for all his energy business. In fact, your partner is Total. And look at the balance sheet of Total, look at the reputation of Total. All these things looking into account, I'm looking at the man going around and buying the port in Israel. And, he has Wilmer, that is his into solvent extraction. What else you want? He's got the largest solar capacity. What do people want? Whatever the hit which Edinburgh had to do it. In public domain today, we are not talking about, that the world was stashing the money in World Bank for when the World War in Switzerland. Today, that same Switzerland has gone in for a tailspin. Credit Suisse, which is a 100-year-old bank, has gone for a tailspin. Because we're not talking about Silicon Valley and all. Today, nobody talks in public domain that India is doing a rupee trade with 17 countries. What I'm looking at is I have no relationship with Gautam Adani. I've never met Gautam Adani. But as an analyst, I would say I have very high respect for such people. Whether it is Tata's, Birla's, because these are the guys we want in this country who are building India. Whether it is Tata's, Birla's, Adani's, and the Ambanis of the world, I would say. So my contention is, I'm very bullish on this. This is just a perception. ultimately the markets will settle down and it will bounce back because people are underestimating what Adani Total Gas is.
So Rajesh, it seems you're fairly optimistic about the prospects of the Adani group. So I just want to ask you, how did you read into Hindenburg's report?
Well, yeah, I don't see Hindenburg. Who's this guy who's Hindenburg? He's a trader. He's doing some short selling. He must have promised something. He wants to complete the deal. So, he comes up with a report and he hits these stocks and he makes a deal. What is he? Is he a white lily or he's a God's saint or something? He's also a typical trader. He's a businessman. Why go after it? He's not a credit rating agency like Standard and Poor or whoever, or the Indian credit rating agencies. Why give too much of importance and why read too much between who's this guy Hindenburg is? According to me, he's a very silly guy.
Okay. Rajesh, you may not be giving importance, but there are a lot of investors who are looking at Adani at this point in time and definitely giving it importance.
Well, then, in fact, what I would say is it's only time, in fact, which will say that, in fact, my analysis will work out to be correct. Because, in fact, when we do these TV programs, we are doing it only with the intentions of some TRPs or this thing. And today, the name is attached to some political this thing. So I think, this is the way we are doing it. But okay. I think as far as the business model is concerned, it's a perfect business model. He's a pakka businessman. He's the second Dhirubhai. And I'm very confident about this man. He'll sail through. There's nothing wrong. Okay. Who has the capacity to go in and buy wholesale? The guys who came to India that time, in fact, when they said that, all these Indian companies are incapable of doing business, only the multinationals will do it. And today, guys like Ramdev Baba and all these guys are teaching these multinationals a lesson, and these guys are talking about very negative about us. I'm very positive about my own people, and I'm very positive about these Indian businessmen. Okay. India is absolutely onto a strong wicket.
Okay, we'll let time play it out, but I want to ask you a question about debt at this point in time. How optimistic are you about Adani's capability to pay back its debt? Do you think the issue has been overplayed? How are you reading it?
See, every business, it's only the software companies, the IT companies can only be a zero debt company, but a manufacturing company, when you're making a product, you cannot be a zero debt. There's nothing wrong in zero debt. And as long as you're able to service your debt, and if you're able to pay off your banks and all, there's no problems. Even Ambani's also had a very high debt. They paid off. So as long as your company is good, your operating profits are good, you're able to pay, you're able to service the debt, what is the problem? So as far as cement is concerned, even if he's taking, who has that kind of money to buy a cement plant? Nobody keeps 80,000 crores in a cupboard. So obviously you have to take a loan, you have to have a high debt. You have to put your own money. So there are various instruments by which, in fact, you're raising the funds. In fact, I have written an article also. If you want, in fact, I'll send it to you, where it says that, in fact, he's not the only man, in fact, who's got the highest debt. Even Tatas have a much higher debt. Birlas have a higher debt. So what is wrong in keeping a debt if you're able to service the debt? Otherwise, the company chalengi nahi. How will you run a company? How will you acquire companies when you don't have a debt?
Rajesh, you seem to be having a very strong negative opinion about Hindenburg. Now, I want to come back to them. Do you think there is a confirmation bias, like since they have invested, 2 years looking into Adani, they are riding that short trade. Do you think that they stepped into it with a preconceived notion of, midway through, maybe if it was not working out, something like that, they had to push the agenda because 2 years you gave into that report?
See, ultimately, I don't give too much of importance to this report. I only deal him as a trader. I would not even look at what Soros says. These Firangis are not supposed to come and tell us how we have to do business. Indian guys know, the Indian businessman is a very intelligent businessman. They know how to do business. They're able to take care of their business and the debts and all. I think too much of importance has been given to this aspect. I would not like to comment anything on this guy, Heidenberg.
Okay.
Rajesh,
I'm not very positive about this man.
Sure. So the stocks have obviously corrected about 50%, more than 50% that is. So at this point, strictly from a valuation perspective, what stocks can, if someone is looking to add or looking to get into Adani stocks, what stocks would you say could be a good bet for them at this point?
See, according to me, if you ask me, my favorite would be the platform, the terminal business, what they're into. I get fascinated by oil and gas industry. Adani Total Gas is my favorite. But of course, I don't invest in stock market. I don't have any investments. I don't buy shares. I don't sell shares. It's only my opinion, in fact, which I give. And if I buy these shares, of course, my opinion will be biased. But the way, the Petronet LNG product came in, the liquefaction project, the regasification at the way LNG, Petronet LNG did it. Now the way he's doing it in Damra, and then you have distribution rights in 21 cities. It's a fantastic thing. I think it's going to be, the future is bright for this, provided, of course, things settle down. It's just the dust which has to settle down. I don't feel so. There's a more of a political angle to it. I don't draw much of an, this thing to it. I don't give much of a weightage to it.
Yes. So
See, I've been in this industry. Let me tell you, I've been functioning in this industry for 35 years. I have an experience of 35 years when I started my career. I haven't seen any of the guys, in fact, with this kind of a potential. I've seen the fall of DCM people, Bharatram, Charatram. I've seen escorts. I've seen Modi Nagar today. Where is Modi Nagar today? All these companies are dead. Thapas, they're all dead. This is what we want for India. If we want this kind of a growth, what India is on to that path. We want these people.
So there are 10 listed entities of Adani, right? You're bullish on all of them? All of the prospects of all 10 companies are looking great as per you?
Well, I would say what is wrong with solvent extraction, as long as, we all are going to live, you are going to buy edible oil, I'm going to buy edible oil. So that project is very good. Adani Total Gas is good. Solar power is good. Adani Enterprises, of course, happens to be the holding company. Well, you have to have a holding company, like you have Steel Authority of India under as a holding company for Bhilai, Raurpur and Durgapur. Well, that's one concept what we're talking about. But what is wrong with the projects, what he's doing? You need cement. The kind of the growth what India is going on, the constructions of these highways and whatever we're building in, you need cement. So what is wrong? Every business is on. It's a more of a political turmoil which has been attached to it. I think people are attaching too much of importance. Once this program gets over, you are also alive. I'm going to be there. And 1.5 years down the line, I'll tell you what kind of price people are going to get it. If people are going to sell it, they're making a mistake. If they continue to hold it, and if they're able to ride through this tide, this is where the profitability is, because you have to play. And if you're not able to take the risk, then don't get into stock market. And there's nothing wrong as far as this group is concerned.
Okay, that is, of course, the expert opinion there. We will move on, but just for the sake of disclaimer to our audience at this point in time, these are not our personal opinion, and these are opinion and advices expressed by people we bring in here as guests and as experts. Shifting focus now, First Citizens will acquire failed Silicon Valley Bank. Remember, the Federal Deposit Insurance Corporation, FDIC, took over Silicon Valley Bank on 10th of March after depositors rushed to pull out their money in a bank run that also brought down Signature Bank and wiped out more than half the market value of several other US regional lenders. First Citizens Bankshare Inc., a regional bank, has built a reputation for buying the troubled rival. And remember, the deal comes after several attempts to sell the bank by US Federal Deposit Insurance Corporation did not succeed. First Citizens shares soared on the news of the deal, surging more than 50%. Our guests continue to be with us. I want to come to... Okay, let's play up a quick bite before I go to my guests.
So what we've seen is lessons learned from banks in the past. Now, we all remember the great financial crisis and the bank crisis then. Very different than today. And the Fed is trying to make that very clear. The FDIC, the Treasury, really trying to send a strong message. Look, this is not a credit crisis like we said in 2008. So where we've seen bank weakness, we've certainly seen very quick responses to have other institutions come in, merge with these assets, take them on. SVB was a very sought after institution, very well-heeled and exciting to some people clientele. Interesting matchup with Citizens. I don't know the reasons why the FDIC decided this was the best choice, but I certainly know why Citizens is interested in SVP. California is not part of their footprint. It's a great opportunity to get into that part of the footprint. And they do have a history of building out their business, buying distressed assets. So they've come into much smaller situations like this before. And it might be that track record that helped them look attractive for this situation. They're half the size of what SVB was. So they're stepping up to walk into becoming a very major player in the country.
Okay, there seems to be some hope there finally for SVB. Amit Gupta is joining us at this point in time. My colleague Suyash continues to be with me in the newsroom. Amit, what is the larger impact of SVB acquisition on the US stock market? We've seen some correction today and the bank Nifty in India is also up. What is the expectation on the stock market?
Hi, thank you for having me. So I think it's a short-term positive. Definitely, it sort of risk off in the market. What has happened is that FDIC has given a $70 billion credit limit to the First Citizen Bank, to the Silicon Valley Bank, sorry. And that sort of eases out the concerns about the liquidity. Because the First Citizen Bank will be doing the operational thing, and they don't have to worry about the managing the liquidity risk into this. So I think it's a short-term positive, but I would still watch things over the next 30 to 60 days. So just to see how the credit crunch is moving into the stock market and into these regional banks, because what is happening is that a lot of these regional banks are seeing very heavy outflows, and these are going into the larger banks. And if you talk about the numbers, then regional banks are responsible for 80% of the commercial real estate lending in the US, and about 50% of consumer lending in US. So these are big numbers, and if deposits keep running away from the smaller banks, it keeps going to the larger banks. Then I think it's going to be a sort of a credit crunch on the US economy, because the big banks cannot fill that void immediately, in very short period of time. So the economy will take a hit and the inflation problem will be solved. But that's a wrong way of making everything worse. So I think it's a short-term positive to the markets, but I will still, want to watch the market over the next 30 to 60 days. And then, decide, take a final call on this matter.
Okay, Rajesh Tambe is also with us. Rajesh, it feels like it's one bank to itself. There is an absence of a policy guidance on banking crisis in the US. The expectation was, of course, that the government will step in, will bring in, some sort of guidance here on what can banks do, but that really hasn't happened. We're seeing banks trying to acquire each other, shore up liquidity, ensure that the another bank doesn't fail. But that's not enough, is it?
Absolutely. Now, there's 2 points, in fact, which I'd like to bring in. One is that, in fact, America should learn a lesson that, stop interfering into the affairs of the countries, Why do you want to fund this? What is your interest? I've not been able to establish this. I've not been able to understand. I think, 16 invasions you did, 14 or 16 invasions you did, you invaded the different countries of the world. What did you achieve at the end of the road? Nothing. Where are you on the verge today? There's so much of unemployment there. The inflation is so high. You're going to print more of currency there. And these guys, in fact, these Goras are talking about, the way, what I would suggest is, come to Reserve Bank of India, work in Reserve Bank of India. You'll come to know how to run a bank. We are the most systematic people. We know how to run a bank. Why these guys are hesitant to come to India and learn from us? And these guys are talking about, 60 days and 90 days. Nothing is going to happen in 60 days and 90 days. You mean to say the whole situation will change in 60 days? You have something very, you have some magic stick with you. That in fact, some magic will take place and things will get back to normal. The first and the most important is stop funding this war. And if you do it and stop interfering into the affairs of the different countries and look at your own country, you will be at a proper position and things will get back to normal. This is what US has to learn.
Amit, I want to come back to you. You were saying that this seems to be a short-term fix So what should be the way, or how should investors proceed if they are looking into getting into banking stocks?
I'm assuming we are talking about Indian banking stocks. So I think what has happened after this crisis is that a lot of startups, because remember the Silicon Valley Bank (SVB) was basically funding startups. So a lot of Indian startups which were based out of US and were banking with the Silicon Valley Bank, they have actually moved out of US, and a lot of their private equity and venture capital folks have told them to open up accounts in India. I think that's a big positive, because that money is going to come here. Those deposits are going to come to India. In fact, I think last weekend I saw at least three private banks, large private banks, giving out advertisements in the full length advertisements in the newspapers, and actually inviting a lot of these banks to come and bank with the Indian banks and open the deposits. So I think that shift will happen, because nobody really wants to take a chance, and nobody's sure how the situation will be there in the next next quarter. So I think for India, it's a big positive. And I would be a buyer on dips in a lot of these financial stocks. As a disclaimer, we do own a few of the financial stocks, and we will be looking for opportunities to add to them or even initiate fresh positions into them.
So just to be clear, Amit, you're fairly optimistic on the Indian banking situation, right? You don't see the crisis reaching Indian shores. Is that so?
Yeah, as of now, there is not much instance that it will help. It will, sort of hit Indian banks a little bit. I think Indian IT would be probably more impacted than Indian banks. The reason I say that is because a lot of these Indian IT companies, especially the top five large cap IT companies, their BFSI exposure in US is close to anywhere between 28 to 40%. And because these banks focus in the next couple of quarters will be managing liquidity risk, managing interest rate risk. So I think the new developments which happens with the new development projects which happen with the IT companies, that would slow down and sort of have a crunch on the margins of these IT companies. So I think the impact on IT will be a little bit more. I don't see too much of impact on the Indian banking sector as of now, at least.
We're talking about short term, right? The long term prospects, maybe 2-3 years down the line, could Indian banking sector be in trouble?
Sorry, I missed the first part of the question. Why it will be in trouble?
No, what I wanted to ask was that you're talking about the immediate impact of the banking sector. I wanted to understand if 2-3 years down the line, this crisis could also reach Indian shores.
No, I think the Indian banking system is much more robust, and the kind of measures which RBI has taken in the last few years, as far as the NPAs are concerned, that is very good. In fact, if you look at the recent report, RBI has already asked to make a 20% extra exposure to the top 20 groups, corporate groups in India. So I think that's a very good sort of a proactive measure taken by RBI to already tell banks to increase their exposure. So given the NPA cycle where we are, which is very, very low, and we are just credit growth is just picking up, I don't see an issue in the next 2 to 3 years as far as the lending is concerned to the big corporates.
Okay, that's positive sign there. Thanks very much, Amit, Suyash, Rajesh, gentlemen. Appreciate you joining us for those big important takeaways on that story. Shifting focus, Baidu, the Chinese search engine, has shared pre-recorded videos of its AI-powered chatbot Ernie, which is seen to be performing more advanced tasks than its launch 2 weeks ago. Ernie is considered China's closest equivalent to US-developed ChatGPT. Now, videos were shown during a closed-door meeting and images shared by a Baidu spokesperson which appeared to show some significant developments. This included summarizing financial statements and producing PowerPoint presentation, among others. The meeting was originally meant to be a live-streamed product, launch open to the media and public, but Baidu abruptly scrapped a live stream press event, and the AI chatbot rival to ChatGPT was not showcased in broader community. It was showcased in a closed-door meeting with potential corporate clients. The change disappointed investors, driving Baidu's Hong Kong shares down by 3%. Tests conducted by Reuters show that regular version of Ernie has good command on the Chinese language. However, it produces factual errors and avoids answering political questions. Listen in.
Chinese search engine Baidu on Monday shared pre-recorded videos of its AI-powered chatbot, Ernie, revealing the bot performing more advanced tasks than at its launch 2 weeks ago. While the videos were shown during a closed-door meeting, images shared by a Baidu spokesperson appeared to show significant developments. This included summarizing financial statements and producing PowerPoint presentations, as well as producing travel itineraries. The videos were shown to the first batch of companies that are testing an industry-focused version of the chatbot, which is considered China's closest equivalent to US-developed ChatGPT. The meeting was originally meant to be a live-streamed product launch open to the media and public, but the format was changed to prioritize what Baidu said was the strong demand from over 120,000 companies that had applied to test the bot. The change disappointed investors, driving Baidu's Hong Kong shares down over 3%. More companies will be able to sign up to test the industry-focused version of the Ernie bot starting on March 31st. Tests conducted by Reuters show that the regular version has a good command of the Chinese language. However, it produces factual errors and avoids answering political questions.
Okay, joining me is my colleague Amit Ranjan at this point in time. Significant development there for Ernie. It shows that Ernie is now more advanced, maybe as good as ChatGPT. But the fact that the live stream had to be cancelled, it shows really badly on the face of China's ambition.
Thank you, Shweta. You have to understand what China wants to be to understand this. They had a forgettable presentation of Baidu some time ago. They are already falling behind the US 5 times as far as investments in startups for AI is concerned. They don't want to basically look bad in another chance, in another presentation. Therefore, this closed door sort of live stream only to their corporate clients. That is as much as I understand. China is the second largest economy in the world, probably with the biggest ambitions. They want to use, they have plans to use AI not just in military applications, but also in city development, in infrastructure. They have basically promoted companies, been behind companies like Tencent, Baidu, even Alibaba, to develop AI prototypes, which will help them in these ambitions of theirs. So that is one of the reasons why probably they had to cancel this presentation last minute. And let me repeat myself, as far the figures of 2022 are concerned, the investments in AI startups in US was 5 times that of China. We spoke yesterday about how China is going ahead in is leading the way in quantum computing. They are way ahead of the rest in that. But here, probably it does not augur well with their ambitions to lag so far behind. Okay. And that is why the cautious steps.
Okay, but we were talking about quantum computing, Amit, and so I will have to ask you, because you've been tracking the progress of ChatGPT very, very closely, and the idea, of course, is to match up to that level. That hasn't really happened, has it? If it were to happen, then they wouldn't have to cancel the last live stream last minute.
Exactly, exactly the point, Shweta. They want to be as good as the best in the world.
Okay.
They are not, and that does not augur well with how they want China to be looked at across the world. They want to be the biggest in everything, and that, in my opinion, strictly my opinion, is why they are shy of basically doing something a second time that may not go down well with their consumers.
Okay, and just to let our audience know at this point in time, because they decided not to go ahead with the live stream, shares of Baidu tanked 3% in the Hong Kong financial market. Not just that, there was some sort of disappointment with investors, with people who were really looking up to China to come up with its own AI platform. I want to ask you at this point, Amit, what's coming up in the way of AI funding for startups in China?
Well, it's something like you say, they want to be the best, but they have their restrictions. So something that AI companies or startups in China have to contend with is the strict censorships that come from China itself. Secondly, because China has spoiled its relationships with at least the US. Last year, US prevented NVIDIA from exporting key technology advancements which are used in the chips used for AI research and development to China. So Chinese startups have to contend with that also. And these are the two things basically that are coming in the way, are roadblocks in the way of AI development within China.
Okay, Ernie there, the latest chatbot offering from China was on the showcase. Remember, the live stream had to be cancelled, so China released some closed-door videos, and Baidu spokesperson later on talked about the new advancements that China has made in the AI space, but the last-minute cancellation led to Baidu stocks taking a beating. China there, very, very ambitious on AI, but not being able to meet the expectation of the market and of the people just as yet. But we're going to shift focus for now. Walt Disney Company has begun the first leg of its planned 7,000 job cuts, a key part of $5.5 billion savings drive the company announced on Friday. The reduction includes plan to trim $3 billion from its budget for movies and TV shows, and the rest is in non-content related areas. About $1 billion of the savings are already underway. The company will be reorganizing into 3 divisions: an entertainment unit that includes its main TV, film and streaming business, the ESPN Sports Network, and the theme park unit, which includes cruise ships and consumer products. The first group of employees will be notified over the next 4 days. We're talking about the group of employees that will be sacked or will have to be taken off. Chief Executive Officer Bob Iger said in a memo to the staff on Monday. And a second larger round will happen in April, impacting several thousand workers across divisions. The last of the affected workers will receive a notice just before summer. Amit continues to be with me. Amit, how would these job cuts be distributed among various divisions of Disney Empire?
Well, you have to look at how Bob Iger has operated over the years. He served the company, which is the largest entertainment company in the world, for 15 years, taking over from Michael Eisner. Even the first time when he had taken over in the early 2000s, certain big names were put in the back burner. Touchstone Pictures, which was one of the big brands of Disney, was put in the back burner. Miramax Pictures was sold off over time. And he turned it around. There were takeovers. This time he was called back. Remember, the year ended, the quarter ended December 2022. The entertainment and streaming business of Disney was down $1 billion. That is where Bob Iger is starting from. So these layoffs will be distributed across basically different divisions. He plans to cut down $3 billion from the movies business, the television business, and the streaming business of Disney. So for all the fans, there will be the Marvel movies probably will have little smaller budgets than they used to.
Okay.
The company will be reorganizing all 3 divisions, whether it's entertainment, which includes TV and streaming, ESPN Sports, which is a big chunk, and theme parks, luxury cruises, and merchandise. So there will be
so there'll be reorganization
across the board.
Of course. Yes.
The good part is the initial the steps show that they are not cutting down on the creative. Mm-hmm. So certain distribution businesses have been dissolved. the entire business of podcasts and books and stories for TV shows has been dissolved. That is the starting point. Disney employs 220,000 employees across, which include term employees and full-time employees. So that is how much employee base they have. 7,000 is not such a big chunk on that.
Okay. Do you know, Disney stock also reacted to the layoff? Was the stock down, I think, about 10%, is my understanding?
Well, we have to look at in 2022, Disney stock had fallen 44%. In February, when they first just announced that they'll be going in for these layoffs, it rose almost 10%, which was the biggest intraday rise in this stock in a long time.
Okay.
Yesterday, the stock rose another 1.6% to close at $95.62. So the starting has been good as far as the numbers are concerned. And Bob Iger, as is his want, is on his way.
Okay, so Bob Iger there making sure that Disney stays on course to profitability. You're a former Disney employee, and I have to say this for the sake of our audience who's watching us. You worked with Disney Singapore. What is your understanding of how Disney work culture operates? Are the layoffs common? And you also talked about Bob Iger. Were you there when Bob Iger was in command?
When I joined it, the global head was Michael Eisner,
okay.
And Bob Iger took over from him. Like any big company, I do not think Disney believes in trickle layoffs, okay. if I may use the term. So
what is trickle layoffs?
That few today, then after 1 month,
okay.
few tomorrow. They have announced 7,001 go, and they're doing it in 3 phases. What they could have done is, they would have done those 3 phases without saying that this is the total number. So they don't, it is good for employee morale, and that is what Disney is like. That is my experience of Disney. So it is not a company of layoffs, but when they take a decision, that's what I said, Bob Iger is on his way. I see him as a man who takes hard decisions for to get the numbers right.
Okay.
And he has done that.
And he's getting the numbers right. The stocks were up 1.6% on the back of the news that Disney is going to lay off 7,000 employees across various divisions and will be reorganizing, restructuring as a plan to bring Disney back on course and make it profitable once again. And that's all we have in this bulletin. Thanks very much for watching.